Ladies and gentlemen, good day and welcome to Ratnamani Metals and Tubes Limited Q3 FY22 earnings conference call hosted by Monarch Networth Capital Limited. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal for an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sahil Sahni from Monarch Networth Capital. Thank you, and over to you.
Yeah, thank you, Zed. Good evening to all. On behalf of Monarch Networth Capital, we welcome you all to the Ratnamani Q3 FY22 earnings call. We are delighted to host the management of Ratnamani today, and from their side, we have their MD, Mr. Prakash Sanghvi, sir, their CFO, Mr. Vimal Katta, sir, and joining this time is Mr. Manoj Sanghvi, sir, who heads the Carbon Steel Division. So without taking any much time, I will hand over the call to Mr. Prakash Sanghvi, sir, for the opening remarks. Thank you, and over to you, sir.
Yeah, good evening. I will give the opening remarks today. Manoj Sanghvi here. Okay, so although the numbers would have been seen by everyone, but I would repeat again, both quarterly and 9 months. So we did, this quarter was the highest for us, 937 crores of revenue, and 9 months was 2,192 crores. EBITDA 140.47 quarterly and 353 crores was for the 9 months. Q3 revenue split, if we see between carbon steel and stainless steel, quarterly 77% was carbon steel and 9 months 75% is carbon steel. Orders on hand as on 1st February was 1900 crores, of which roughly 665 crores is stainless steel, balance is carbon steel. So this is on the earnings and orders on hand. On the market side, between carbon steel and stainless steel, so carbon steel line pipes, we have already bid close to 2 lakh tons in oil and gas and 2 lakh tons in water segment. Of this, we are expecting good orders this quarter. And stainless steel under bidding is 27,500 tons, both stainless steel seamless, tubes and pipes, which is close to 1,700 crores, of which we plan to book around 300 to 400 crores in this quarter. So this is from our side. In detail on the projects, if anybody wants to know, we can add further.
Will we begin the question and answer session, sir?
Yeah.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star and 1. The first question is from the line of Ashutosh Tiwari from Equirus Securities. Please go ahead.
Yeah, hi Prakash bhai, Manoj bhai and Vimal sir. So firstly, on this bidding data that we shared, we said that in oil and gas carbon steel, we have bid for 1 lakh tons and 2 lakh tons in water.
Yeah, correct.
Okay, but in the past said that we'll probably avoid booking too much in water because of the low margin and maybe sometimes higher receiver days as well. Is there a change over there, or is just that for the sake of bidding we have bid so much?
No, this is the total bidding. We've always been selective on the oil and gas segment. However, whatever is under bidding, we have informed on the call. So, and these projects are in Gujarat, so it is not like we are bidding in north or south, where competition is where we don't have that competitive advantage. So in Gujarat, some projects we might target.
Okay. So, and oil and gas, is this largely domestic only?
This is largely domestic. One of the order is what we are already executing. It is an extension of that.
Okay. So can you provide some color on, like, say, in oil and gas segment, whether it's India or overseas, for carbon steel segment, where we expect orders to come from, or where bidding is going on over next, say, 1 year, which are the likely projects which are happening or already announced by the customers?
Yeah, so breakup of this 3.5 to 4 lakh tons would be NRL Numaligarh Refinery Limited. So phase 1 we are already executing. Phase 2 tender is submitted and reverse auction will happen sometime next week. So that is one tender which is close to 1 lakh tons.
Okay.
Then we have another line which is IOCL has announced. Project is called P25, which is from Kandla Mundra going to Uttar Pradesh. So that is 240,000 tons, for which tender is submitted. Reverse auction might be in another 2-3 months. So these are all which projects which will be finalized in next 2-3 months. Then GAIL Mumbai Nagpur Jharsuguda extension, because Mumbai Nagpur already tender was done and awarded. Now that line is being extended to Jharsuguda. So that tender is also announced. It is out. Bid is submitted. Reverse auction will happen in next 2 to 3 months.
Okay.
That is 70,000 tons. So these are 3 major tenders. Then we have, of course, small tenders, all adding up to close to 4 lakh tons.
So you want to say 4 lakh tons is there in the oil and gas itself?
Yes, 4 lakh tons is in the oil and gas.
Okay, I think I missed, maybe there's some disturbance that time. Okay, so it's basically higher in the oil and gas. Okay. And also we are looking at opportunity in export side as well in this carbon steel segment?
Exports, most of the countries' longitudinal submerged arc welded pipes are used for oil and gas. So our ELSA plant, we've just started commercial production. Last quarter we are going to get some revenues from that. So that approvals, once international approvals, so next year we will target something from that.
Okay. And now coming to this stainless steel segment pipe, you mentioned the 27,500 tons is what we have basically we have bidded for. This will be, I guess, mix of export and domestic both, right?
Sorry?
So this asset, stainless steel tubing, where we have said that we have bid for 27,500 tons. That would be inclusive of exports as well, right?
Yeah, that includes export also. So right now also, if you see our order book, 665 crores, of which 285 crores is export. So roughly 40-45%. So overall put together, carbon steel is 25%. So that around that percentage in totality, we will maintain our export.
So on this new seamless plant which got operational during this year, basically, how do you see the volume ramp up happening next year? Because that is where I think which can provide the bigger delta in terms of growth. And what we are targeting basically in terms of, we have already discussed in the past about distributors basically also. So can you throw some more line on how do you see volume in this SS seamless segment next year versus this year, what we are doing?
See, this year, I don't think any major contribution can come. It might be in the range of 30 to 50 crores only in this quarter. Next year, 30 to 40% capacity utilization is what we will be targeting. Yeah.
Of this 20,000 plant?
Yeah. So 6 to 7,000 maybe there. Yeah.
Okay, that will incremental volume next year from the new plant.
Yeah.
And lastly, globally there's a lot of talk about this green hydrogen and hydrogen usage also in the steel plants, maybe over the longer period for direct reduced iron through hydrogen route. So are we also, because there also piping will be used, whether it's a stainless steel pipe in the plant or maybe carbon steel pipe for transportation. So are we looking at, or maybe doing some initial work on that as well as a future prospect? Any color over there?
No, as of now, see, it is very in nascent stage. The hydrogen, the fuel itself is trying to make a statement in this field. So once that happens, then eventually what mode of transportation will be used, what kind of pipeline will be used. Only some work has been done done on that segment. So still a long way to go, I feel, in that.
Okay, but I think the global competitors have started talking about it, at least in their discussions lately. So I think that could be an emerging area over the longer term. Okay.
Yes.
Thank you. I think that's all from my side.
Thank you very much. The next question is from the line of Abhijit Bora from Sharekhan. Please go ahead.
Can you just, is there any change in the revenue and margin guidance for FY22, and you can guide for FY23 revenue potential?
See, for the entire year FY22, 3,000 crores is the top line, which we can look forward to, plus minus maybe 50 crores, 100 crores sort of, depending on how the financial arrangements are made, how the material clearances are given by the customers. And margin range same, that 16 to 18% plus minus %, we continue to hold, because looking to the product mix which we have been targeting, this range should be maintainable in the longer run also.
Okay. And any specific reason for lower margin in this quarter at 14%, maybe due to higher share of carbon steel?
See, mainly,
or any others? Yes, sir.
Yeah, mainly because of the higher contribution to the top line coming from carbon steel line pipe business. Nothing else. Yeah.
Yeah, and I was a bit confused on the bidding part. Just some clarification on the numbers. We have bid for 1 lakh ton in the oil and gas segment and 2 lakh ton from the water transportation segment in Gujarat, right?
No, 4 lakh tons in oil and gas and 2 lakh tons in water.
Okay. And out of that 4 lakh tons, you highlighted that some part is for NRL refinery, some from IOCL and some for GAIL. Can you just give those numbers once again?
So NRL is roughly 1 lakh tons, 100,000. IOCL is 2,40,000 tons. And GAIL is close to 70,000 tons.
Okay.
Yeah.
Okay. And finally, on like we have order book of close to 1,900 crore. What is the execution time frame for this?
6 to 7 months.
Okay, and in terms of the quarterly run rate of order intake, what can you give any guidance given the kind of bidding you have done?
So we plan to book close to all put together carbon steel, stainless steel between 800 to 1,000 crores in this quarter.
Incremental orders, right?
Yes, incremental.
Okay. Thank you, sir. That's all from my side.
Thank you very much. Next question is from Abhishek Ghosh from DSP Mutual Fund. Please go ahead.
Hi, sir. Thank you so much for the opportunity. Sir, few questions, just starting with the bid pipeline. So, while you talked about this oil and gas and water, does it include the bid pipe, the only CA, ELSO and ETSO, or does it for carbon steel include ERW pipes as well?
Oh, this is specifically ETSO and ELSO.
Okay.
ERW is another But some sizes, like for example the GAIL 70,000 tons, some players can manufacture a ERW also. So there is an option, it can be ERW, spiral, LSAW. But few tenders like NRL and IOCL is only HSAW and LSAW.
Okay. So out of the total capacity that you have is almost about 340,000 tons, right, in LSAW, HSAW?
Yeah, LSAW is close to 340,000.
And out of that you have a bid pipeline of 4 lakh.
Correct.
Okay. And sir, just to understand, if you were to compare this number of that 4 lakh bid, say couple of years back, was this more like 4 lakh only, or what this used to be 2 lakh, 3 lakh? If you can give us some color, it will be helpful, sir.
No, so on an average, every year, oil and gas, spiral and LSAW put together 5 lakh tons is finalized in domestic market.
Okay.
So of which 4 lakh is right now, so we feel that this year that number might go up.
Okay.
Yeah.
So 9 months already would be at a higher number, at least 2-3 lakhs plus this 4. So this 5 has gone almost to 6-7 lakhs. I'm saying directionally.
Yeah, it's in that direction.
Okay. Okay. And sir, in terms of you spoke about 2-3 major projects which are contributing to this big pipeline, but anything, so this will be one time, but beyond this, what's the visibility? Are there more talks about major refineries coming up or petrochemical plants coming up? Any visibility or any color?
So one refinery that we know of, HRRL, of course, the work is going on, which everybody is aware. But one major refinery will be Kaveri Basin Refinery. So that has been awarded the PMC. For that, the first MTO will start in the first quarter of next year.
Sorry, sir, I missed you. You were breaking up. If you can just repeat in terms of Kaveri Basin Refinery, when is it going to start, the tendering?
First quarter of next year. We expect a few underground piping tenders.
Okay. And you said PMC has been awarded to, I missed, to which?
Engineers India Limited, yeah.
Okay. Got it. And how big is this opportunity, sir?
This will be a huge opportunity. Very good for process piping and stainless steel pipes. Line pipes will follow later once the refinery is established.
Okay. But this will be like you mentioned about the NRL and other ones, almost 1 lakh ton each. It will be in that range, or will it be like 2-3 lakh ton ka range?
No, so these will see, initial MTO will be huge, but not in lakhs of tons, because we cannot compare line pipes with process piping and stainless steel pipes.
Okay, so initially it will be value, later it will be volume. That's the way to look at
it. Yes.
Okay, got it. And sir, just one broad thing, for this carbon steel, when you bid, well, you did mention this SS will be, executable over the next 6 to 7 months. In terms of carbon steel, what's the usual lead time for you to kind of finish the orders or execute the project?
Between 6 to 9 months for line pipes, and process pipe within 6 months.
So line pipes is 6 to 9, and process pipes you are saying is within 6 months. Okay.
It depends on the size of the order, the quantum. So we start anywhere from the 3rd or 4th month and finish within 9 months.
Okay, got it. And so just couple of things, if we look at, just coming back to CS in terms of broadly at that 340,000 tons capacity, this bid of 5 lakh tons, is it the highest ever for you in last 2-3 years? Because you have 4 lakh of this and 2 lakh of water. So how should we look at it?
See, every year if you see one big project has come, like a year before this, it was the LPG pipeline which IOCL had come up with. So which again was 2 lakh, close to 2 lakh tons, and then GAIL, HPCL had also had some tenders. So every year we've seen 5 lakh throughout the year, but this time it has happened that 4 lakhs has come all together, which will be finalized within 3 to 4 months only.
The bunching
in
up
oil and gas. Sorry, I missed you.
I'm saying it's got bunched up this time to that 4 lakh.
It's got bunched up. So there is an advantage, there is a disadvantage also, because you have got a stipulated delivery time. So everything one player cannot take.
Very true, very true. And sir, just one last thing, and I'll come back in the queue for more questions. In terms of stainless steel, the whole import substitution element, now when we see freight rates from China has moved up significantly. So is that, in this current environment, will it help you to better price your product vis-a-vis an imported SS tube? Some thoughts around it, if you can just help us with it, will be helpful.
Freight rates have gone up, but on stainless steel tubes, pipes, it is not, it is a marginal element.
The value is high.
Yeah, so that's why our exports are not affected. Otherwise, our exports would have also been affected, right?
So, but in terms of your ability to substitute those imported SS, what are the efforts that you trying to make, and just some thoughts, because that is a very big piece in your whole capacity that you have put up, and to be able to ramp up that well, that will be a very big piece. So how should one look at it?
So, various efforts are being made, like anti-dumping, because a lot of Chinese pierced material is coming in the country, right? So that is one front. Then, of course, the BIS certification.
Okay.
So mills here would definitely have BIS certification and would manufacture pipes of certain quality. So international mills also is required to have that certificate. So those will be some modes which will be created.
Got that. Okay, sir. I'll come back in queue for more questions, but thank you so much. Wish you all the best.
Thank you. Next question is from Kunal Shah from Carnelian Asset Management. Please go ahead.
Yeah, hi. Thank you for the opportunity. My question was in two parts. One part was that we have done approximately 186,000 or 187,000 tons in 9 months FY22. So, and you have given a guidance of about 1,000 crores revenue to do in the last quarter, which would be more or less similar to what we have done in the current year. How should we look at it for FY23 and 24, considering the capacities that we have built up and the utilization, for the coming years? And the second question was also on the stainless steel part, right? I mean, taking forward the question from the previous participant, what would be the kind of cost differential that would be there in the imports that would be happening from China, in comparison to ours? And when do we see this ramping up now of the capacity, especially that we have built up on the stainless steel part, because still I believe, in comparison to the previous year, we are more or less at the same levels at what we have done, despite the capacity coming up. So, yeah, if you could help with those two questions.
So your first question was revenues this year, last quarter. It will be between 800 to 1,000 crores. So that's you answered that question yourself. Second question, 23, what is it looking like, and 24, what is it looking like? 23, growth in revenue somewhere between 15 to 20%. And similar going forward in 24 until we reach the peak capacity utilization for ELSO and stainless steel extrusion.
So in terms of tons, how should we look at the overall utilization for FY23 and 24?
It will be range bound, but near to that 60% on an average of the total capacity.
Okay.
Yeah.
Okay. And the blended realization and blended EBITDA should be more or less in the same range of 16,000-17,000, or blended EBITDA, I mean, it's more related to the second part of the question as well. How do you see the ramp up in the...
No, so both, the contribution would be from both carbon steel and stainless steel in the revenues going forward, the increase in revenue. So we see it to be in the range of 15 to 18% going forward also.
Okay. So if you could specifically help understand the ramping up more on the stainless steel part, I mean, what is stopping that and how do we see that scale up, in the FY23 and, the price differential, if any, from the imports and our products, or how do we see that ramping up basically, sir?
So this year, I think so we will be doing close to 1,000 to 1,500 tons in the extrusion press. Next year, what Kataji has already commented that we are going to do close to 6,000 tons. So that ramp up is happening. Since this is a hot process, ramp up is not immediate. Plus the approvals from various oil and gas companies. With the current situation where travel is restricted, it is getting delayed. Plus, it is a hot process. We start with base grades 304, 316, and as you have that comfort and confidence, then the higher grades nickel alloys would be manufactured. So not only the ramp up will happen, but also the value addition will increase.
Okay. So basically, if I've understood correctly, it is more to do with the approvals from the client side and we ourselves ramping up rather than the demand side as of now. Is that understanding correct then?
Yeah, it is. One is approvals. Second is this product is actually the size range is new for us, which you have to establish distributors, distributor network, say in Europe, US. So that process is going on.
So this should get sorted in another 6 months now since things have started to open up.
Yeah, our target is to do 6,000 tons next year, close to plus minus say 500,000 tons. But to utilize 30% capacity, 20 to 30% capacity is our target next year.
Okay. And also in the last call, we were thinking of, setting up capacities abroad as well. And it was discussed that, it will be taken in the drawing board and all. So any thoughts on that? How, because this we will ramp up the utilization in the next 2 years, whatever capacities we have built now. Okay. So anything on that particular front, or it is still on the drawing board and nothing to comment as of now?
It is still on the drawing board. We've appointed someone who's doing the market study. Once we have that, any gap and opportunity, then we will go ahead.
Okay. So as of now, it is still a little far away.
It might take another 4 to 6 months.
Okay. Fair enough. Thank you. I'll join back in the queue.
Thank you.
Thank you. Next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Yeah, namaskar sir, and thank you for this opportunity. Sir, in the LSAW segment in particular, sir, have you seen the tendering being slow than what the past have been because of the steel prices, the high steel prices and the pass on? Are the EPC players holding on to the tendering, waiting for the prices to correct? What is the scenario on this front? And also, sir, on our portion getting what we have subscribed to the order, what was the total size of the order in which we have got 2 lakh or the quantity which you have mentioned?
No. So both LSO and HSO, as I said earlier, 4 lakh tons at a given point of time has come for the first time actually, which will be finalized in next 2 to 3 months. So the increase in steel price have not actually curtailed the demand. Future demand we are not aware, but see there, yeah, this budget also they have, and plus with the increasing oil price, investment because the realization would be more for the oil companies also. So eventually the infrastructure has to be built up, and for gas supply also, so many geographical areas have been bid across India. Now once anybody has taken that geographical area, the government has the responsibility to provide gas to at least to the tap-off point. So we don't see the demand going down.
Okay. So for this 4 lakh सर जो हम लोग ने पोर्शन क्या लिया है और जो हमें टेंडर हुआ है उसमें से टोटल साइज ऑफ द कॉन्ट्रैक्ट क्या था? What percentage we have got? That was my question. Or was it totally
we have not got
awarded to us?
This is under bidding.
Yes, sir.
This is under bidding, and this is direct bid to PSUs. So it is not from the EPC company, and what is that for? The water normally is EPC, but oil and gas is direct to the PSU.
So that entire size is of 4 lakh. We have bid for the entire 4 lakh tons. That was my question.
Yes, you are correct. Yes, we bid for entire 4 lakh tons.
We have bid for entire, and this is pertaining to a refinery project, sir.
No, this is not pertaining to refinery.
Sorry. Sorry. For the water project, yeah.
So it is line pipes. It is mix of product pipeline, which is crude or any other product. It is gas because Mumbai-Nagpur is a gas pipeline.
Correct, sir. So when we look at the P&L, we have seen this inventory built up, sir, over the last 2 quarters. So if you could explain what the key reason for the same, and how is this inventory going for quarter 4? This inventory will be diluted.
Actually, this is an answer which he is more equipped to answer, but still I will say, as you know, we follow the practice of covering our raw material on back-to-back basis because all our orders are on fixed price basis. Okay. So, and in a rising price scenario, anyway, volumes remaining same. In value terms, again, impact has been there because carbon steel prices have moved up by almost 70-80% compared to what they were earlier. So one reason is that, and in my opinion, going forward also, to the extent of our made-to-order business, this situation will more or less continue. Rather, for our new hot extrusion facility, also looking to the size range and the material range, perhaps more inventory carrying will be required for the new hot extrusion also. So this is the thing, and fine-tuning for this inventory holding will keep on happening, but once we need to have the experience of carrying the required inventory for our new hot extrusion products. So it will take some time.
Right. Sir, as sir, you were telling about the more thrust the government has provided in this budget. So, sir, on what are the pillars on the ground? The capex cycle. What kind of capex is now anticipated, and how is our companies like us in the sector going to usually benefit from the same, whether it is the Jal Se Nal, the interlinking of rivers, Jal Se Nal, and also the capex in building up the greenfield refineries and also the brownfield expansion in various refineries. So what kind of thrust can be built up, sir, depending upon the national investment pipeline announced and so much thrust being given on the capex part. So just as this is the beginning of a very strong run which companies like ours can expect in the at least in the coming 2 to 3 years.
Yes. So one area which I previously informed is CGD. Because of that, the infrastructure, the gas pipeline infrastructure across country will have to be improved. Then second is, of course, Jal Se Nal. So this is all linking of river, one reservoir to another reservoir, so that water, last mile connectivity to the household, the water is to be provided, right? So the main trunk lines would be water pipes. We've seen already a few tenders coming in Gujarat, Rajasthan, Madhya Pradesh. So things are started. So main lines are the first, then the distribution network, and then the last mile connectivity. So where our product goes is to the main line. So next 3-4 years, there will be major thrust in water projects also.
Right, sir. Thank you for all the elaborate answers.
Carbon steel and stainless steel, of course, one is Kaveri Basin Refinery, which is going to come. Then we have CPCL, and then one PATCAM project by GAIL.
Right, sir. And from the fertilizer space, sir, any fillers, and also for the Ken Betwa project, lot have been spoken about the huge project of 42,000 crore. How is our company going to benefit from this project being on ground, commissioning on ground?
Yeah, so fertilizers also, 3 major contracts were awarded. So a lot of tubes are yet to be, urea grade tubes are yet to be procured. So that will happen. Yeah, and as like water, a lot of irrigation projects are going on. So agriculture will increase, and effectively the requirement of fertilizer will be there. So it is all connected.
Right. Thank you, sir. Thank you, sir, and all the best. Thank you.
Thank you. Next question is from the line of Devang Sanghi from ICICI Securities. Please go ahead.
Good evening, sir. Thank you for the opportunity and congrats on a good set of numbers. My first question is regarding the stainless steel segment, sir. As we are planning to ramp up volumes next year in the SS segment, any guidance on the fresh order booking we expect in for SS segment?
FY23. Sorry, can you repeat your question?
FY23, fresh order.
Fresh order booking, what we are targeting for FY23 in the SS segment?
Okay. Stainless steel order booking for the next year, you mean to say?
Yes,
next
sir.
Year, yeah. What our internal budgets are, like 1,200 crores of.
Basically, order booking of significant order booking plans will be there, because we are going to target at least 40% growth over whatever we are going to do for the FY22 in stainless steel. So plans are there. We should end up somewhere between 1,100 to 1,200 crores of top line for stainless steel, and accordingly matching order booking will be there, and opportunities are also there. For the new hot extrusion, of course, newer markets are also being explored, including European markets and other overseas territories also. So it is like that, and lot of things will be known as we move forward in the coming financial year.
Thank you, sir. That was very helpful. My second question is regarding the order pipeline for stainless steel. As we have guided that we have just said that there is 27,500 tons of stainless steel bid pipeline. Is it possible to break up in terms of project-wise?
No, stainless steel, see, like carbon steel line pipe, one single project is 500, 600 crores. But stainless steel, the order size is 2 crores, 3 crores, 5 crores. At the max, maybe when greenfield project is there, 15 crores, 20 crores. So it is difficult to break up, because this right now 1,500 to 1,700 crores is under bidding. So it will be very difficult to break up project-wise or sector-wise.
Got it. And this Kaveri Basin Refinery, what we have alluded that the order or tender should start in Q1 FY23. Can you just guide what could be the tonnage opportunity in this particular refinery for the stainless steel one?
Tonnage at the moment it is very difficult, because see there will be a lot of equipments also. So those tubes, then the pipes and carbon steel welded pipes, and also seamless pipes. So at the moment, the tonnage idea is not there for that.
No problem, sir. No problem, sir. And what is the cash on hand as on date? Just can you guide that on the 31st of December?
Yeah, 31st December was closer to 300 and just 1 minute. Yes, closer to 390 crores sort of.
390 crores of cash on hand.
Yes. But see, in our case, cash will keep on fluctuating because capital requirements keep on changing based on the order booking and the movement in raw material prices. So right now, inventory procurement, RM procurement is going on in full swing, looking to the very healthy order book. So going forward also, we should expect by March end also our inventory position is going to be on the higher side only. Yeah.
Right, sir. Right, sir.
Yeah. Actually, I was expecting in FY21, beginning FY21 itself, had COVID not been there, so perhaps this situation would have been there in FY21, beginning FY21 itself. Because both the new projects are going to require incremental higher working capital because that 120,000 tons of carbon steel capacity is also significant. And once the full-fledged order booking starts, so it will also require a lot of procurement.
Right, sir. So that was quite helpful. Thanks a lot and all the best, sir.
Thank you.
Thank you. Next question is a follow-up from the line of Ashutosh Tiwari from Equirus Securities. Please go ahead.
Sir, you talked about entering new products and uses of seamless pipes in future with the new plant coming up. Can we highlight some of the areas where we were not present earlier and we have developed products over the last 1 year or planning to do over next 1 year, 2 years?
On stainless steel pipes, you want to know?
Yeah, actually, stainless steel seamless pipes. I think we talked about that with new plant with a higher diameter. Also, we will be entering some of the product segments where we have not present earlier.
So the stainless steel extrusion press, what we have right now, what we had until now was up to 3 inches. So we were not present in segment above 3 inches. So this all these segments, maybe the sectors are same, refinery, power plant, but this is a whole new addition of size range.
Okay, so have we got some customer approvals over there from this larger range, whether it's domestic, maybe may not be export because travel restrictions and all, maybe the overseas customers would have, there was some delay in their inspection and all, but in the domestic
the process of approval has started. We've received some domestic approvals. Some we had some virtual audit also recently. So that process is going on and approvals are falling in place. With the technology and the latest plant what we have, it won't be challenging, but with the constraint of COVID and people not being able to travel, it is taking a little longer time.
Okay. And secondly, on this LSAW segment, that 1.2 lakh tons plant, new plant, as of now, let's say, what visibility we have in terms of utilization of that plant in the FY23?
This year we will be using close to 15 to 20,000 tons. And next year we plan to have anywhere between 50 to 60,000 tons. So almost 50% capacity utilization.
Okay. And we already have started receiving orders for this.
Yeah. We already have orders on hand right now for LSAW close to 200 crores for the new plant.
Okay, 200 crores will be roughly 20,000 tons.
Yeah, between 12 to 15,000 tons, exact number.
Roughly 25,000 tons sort of. Okay.
Does that answer your question, Ashutosh?
Yeah, thank you.
Thank you. Next question is from the line of Diksha from Capital. Please go ahead.
Hello.
Yeah.
Yeah. Good evening, sir. So I just want to know about revenue breakup for carbon steel and stainless steel.
So carbon steel revenue breakup.
Yeah, revenue breakup.
Pratiksha, I have already
Quarterly or 9 months?
Yeah.
Quarterly.
Third quarter revenue breakup, 77% is carbon steel.
Okay.
And 23% is stainless steel, which is roughly 210 crores.
210 crores. Okay. Yeah. Thank you, sir.
Thank
you. Yeah.
Thank you. Next question is from the line of Abhijit Bora from Share. Please go ahead.
Sir, can you give up capex plan for this year and next year? Any capex plan?
As of now, we have no capex plan.
It will be only debottlenecking and maintenance capex only.
Yeah.
So maybe around, and whatever little is still pending, that will also be there. Maybe around 70 to 100 crores sort of thing. Everything combined together.
For this fiscal year, FY22.
No.
Next year.
FY23.
22.
Okay.
Yeah. 22 will be maybe around 100. Just a minute. It should be closer to roughly this year again around roughly 100 crores sort of thing.
Okay. And can you just give me the expanded capacity both in CS and SS? And what is the current utilization rate?
Carbon steel all put together, also spiral, ERW, our capacity now is 500,000 tons, 5 lakh tons.
Okay.
Stainless steel is 40,000 tons. 48,000 tons.
Okay. And what is the utilization rate currently? And by FY24, I think in last quarter you mentioned that you will be reaching revenue of 4,500 crore. So how the utilization will ramp up till that time?
Basically, existing capacities of helical saw, ERW, and LSW in carbon steel are more or less fully occupied right now. Okay, so you can say at around 60 to 70% sort of capacity utilization. In case of stainless steel, seamless is fully occupied. So don't look at tonnage because in case of stainless steel, higher value-added products will not give the tonnage, but value addition will be significant. Okay. In case of stainless steel welded, it might be around again 60 to 70% sort of thing. And newer capacities, stainless steel hot extrusion right now is hardly any utilization right now. In current financial year, it is not expected to give much.
5%.
Yeah, maybe 5% sort of thing. Next, and LSW should be closer to, you can say around 15% sort of thing. And next year, as Manojji has already said, it can be closer to 50-60% sort of thing in case of carbon steel LSW. And new hot extrusion should be closer to 25-30% sort of thing only.
Okay. And just one clarification on one number. In the initial question or remarks, you mentioned that you will book around 300 to 400 crore of revenues from SS in Q4. Is that the right understanding?
Not the revenues, order booking will happen in Q4.
Okay, incremental order booking will happen. Okay. And lastly, the tonnage number which you gave for the bidding pipeline, 4 lakh for oil and gas, 27,500 crore for SS. What is the amount in the value terms, and if we win, what is the success ratio for us to win these bids? What kind of amount we can bet here?
So 4 lakh tons roughly would be, say, 4,000 crores. It
Okay.
would vary between 4,000 4,500 crores. Stainless steel 27,500 tons, roughly 1,800 crores.
Okay.
Yeah.
Hello. Can you hear me, sir?
Participants request you all to please stay connected since we lost the line to the management. Apologies for the delay. We have the management line now reconnected. So you may go ahead, please.
Yes, sir. I was asking about what could be our success rate in this 4,000 and 1,800 crore of bid pipeline. Because if we win a sizable chunk in this, I think that our revenue growth rate would exceed our FY24 guidance of 4,500 crore.
No, see, growth what we see year on year is anywhere between 15 to 20%. One is the utilization, spiral utilization is already at optimum levels. ERW is also at optimum levels. Now where we have got some capacity to increase in carbon steel is LSAW. Whereas in stainless steel also utilization is almost at the optimal level at seamless and welded. We have got some room to increase revenues in the extrusion. So both put together will come as an incremental growth, which 600 odd crores for FY23 and further addition of 600. Yes, so FY24 we can be close to 4,200, 4,300 crores, and that will be the optimum utilization of all the plants.
And with the SS utilization rate improving, do we expect any change in our margin guidance of 16 to 18%?
No, it will remain same because at the same time we have LSAW which goes for line pipes, right? So blended margin will remain between 16 to 18%.
Okay. Okay. Thank you, sir. Thanks a lot for answering my questions.
Thank you. Next question is from the line of Anirudh Shetty from Solidarity Investment Managers. Please go ahead.
Yeah. Thanks for taking my questions. I had two questions at my end. Just a follow-up on the last point you made around, how by FY24 we could do around 4,200, 4,300 crores of sales, which is more optimum numbers. And so we have a runway for 2 years, but by when can one expect the next round of capex to, start, going through at your end?
So things have already started rolling, like the US, what we are thinking. We've already appointed a consultant for that study. And once the extrusion press stabilizes, then when utilization is close to 30-40%, we might think something backward. So somewhere in FY23, plans will be made.
Got it. Got it. Okay. So my next question was on the revenue mix. I think somewhere you shared an investor presentation wherein the oil and gas sector is give or take around 60% of our revenues. I just want to know, for FY22, what is the broad mix look like, between oil and gas and the others? And within this oil and gas, could you also further bifurcate it into what is gas, what is oil, and also, what is more upstream, more midstream, and more, what is downstream, refinery, petrochem related?
Most of it is midstream.
Okay.
There's most of it, and then further bifurcation of oil and gas is not done because one project it will give a wrong indication because 1 year say a major oil pipeline comes, but next year pipeline is there. So always it is bunched together, oil and gas. Year on year bifurcation can be made, but then it won't give any specific advantage to us.
Okay. And but do you feel over a period of time, as we see such strong tailwinds for gas with natural gas and the CGD demand that's there, do you feel the share of gas will start increasing as a percentage of our overall business?
Yes, as of now also you see gas has already, because ERW is most of it is city gas distribution pipelines. Then within spiral also most of it is gas pipeline. So the gas share is increasing. At the same time, oil share has remained stagnant, or one-off project when it comes, it increases.
Got it. And both of this put together, would it still be around 55-60%?
Yes, line pipes, majority would be oil and gas, but stainless steel we have various industries, right? So there the percentage in oil and gas would be on the lower end. Say it will be between 40 to 50%.
Okay, got it. Yeah, that's it from my side. Thank you.
Thank you. Next question is from Shivam Parashar, an individual investor. Please go ahead. Hello. Hello,
Yes.
I'm audible?
Yeah.
Yeah, sir. I just want to ask that, like you on the public capex, like you gave the guidance of the Nal Se Jal, the Kaveri basin. Can you also give the guidance on what's happening on what's the figure of the private capex that is happening from fiscal year 22 and from guidance of fiscal year 23? Any private capex on the sector side?
Private capex within the CGD network, a lot of geographical areas have been awarded to private companies. So their major capex is happening, which will go on for another 3 to 4 or 5 years, because the first phase, and then the network will be expanded. So that is one segment where a lot of private players are there. Which also helps us in the stainless steel business because of the CNG stations where our instrumentation tubes also go.
Okay. And any guidance on the private capex on the steel, cement, and like these industrial side?
Yeah, that general capex, other than major oil and gas is public sector, but other than that, all is private. Power, some portion is public and some private.
Yeah, so you are seeing the positive side on the power capex also along with steel?
So it is stagnant. Power, nuclear we are seeing positive, but otherwise it is stagnant. Thermal power.
Stagnant and nuclear is growing.
Yeah.
Okay. Thank you so much.
Thank you.
Thank you. Next question is from Abhishek Ghosh from DSP Mutual Fund. Please go ahead.
Thanks for the opportunity again. Just one question on the capex part of it going forward. Now, largely, if you look at the matrix that current Ratnamani is, based upon is broadly you have an asset turn of 3.5, 4x, because a lot of the, capex that you've done in last 2-3 years is not getting fully utilized. Something on a broadly your asset turns are 3.5 times today, 3.5 to 4x with those 16-18% margin. Now, you already have fair amount of cash which might get used, but you're also generating almost 300, 400 crores of free cash to be generating every year. So the next round of capex which kind of comes in, will it have similar metrics in terms of asset turns and margin profile? How should one look at it? Because just to give you a number, sir, your current gross block is 1,200 crores broadly, and you'll be generating that kind of free cash over the next 2 to 3 years. So will you be able to deploy the entire part of it with similar metrics? How should one look at it? Some thoughts that will be helpful, sir.
Those thoughts maybe 6 months down the line when we are ready with the capex plan would be appropriate time to answer. But yes, next phase of investment will be close to 500, 600 crores.
See, basically, as far as margin profile is concerned now, it will not undergo any significant changes because while deciding about any capex plan, we do look at the return on capital employed, and it should gel with whatever we are doing right now. So, and that is the reason in our case, it takes a lot of time and deliberations before we finalize any capex plan. And the management is very clear. We don't want to go for any short-term call on capex. All capex, whatever we have done, is done up keeping in mind coming 25, 30 years sort of thing. Yes.
Yeah.
So, no, I appreciate that. My only question was that since you're generating fair amount of free cash, can we expect capexes in the region of that 1,000 crores plus over the next 2 to 3 years, or will you be able to comment on it only after some time? I was trying to move.
Yeah, right now it is very, very, I would say, premature to comment on that.
See, part of it will continue to be used. It will continue to be used for incremental working capital requirement, and then by that time means in next 6 to 9 months time we should be ready with our next growth plans. So that will be the appropriate time when we will be in a position to say what sort of capex size will be there.
Sure. Great.
Yeah, and maybe asset turnover ratio also we will be able to tell you that time, because it might not be that the revenues are increasing, but the value addition is increasing, because some would be self-consumption.
Fair enough. No, completely agree. Wish you all the best for that capex program because it is important since there is a large cash flow generation. So wish you all the best and thank you so much. Thank you.
Thank you.
Thank you. And there are other questions of the conference over to Mr. Sahil Sandhi for closing remarks. Over to you.
Yeah, thank you, Syed. We would first like to thank the entire management of Ratnamani Metals for patiently answering all the questions. And on behalf of Monarch Network, I would also like to thank all the participants. Manoj sir, would you like to give any closing comments, sir?
No, that's it. We are trying our best to keep up on what we say, and hopefully we'll achieve better than what we say. Thank you.
Thank you, sir.
Thank you very much, members of management. Ladies and gentlemen, on behalf of Monarch Network Capital, that concludes today's conference call. Thank you all for joining us, and you may now disconnect the lines.